Hey traders, how's it going? What is going on? Little bit of a crazy day for me. I'll have to tell you guys about my day. Made some mistakes, made some bad decisions, but ended up getting back. Still working on my top one features funded accounts. In the green, barely. Had to claw my way back. Tell me in the chat though, it's good to be here. How did your day go? How did you guys finish up? Or are you still trading? Are you guys green? A little red? Big red? How's your day been so far? Hey Shane, how's it going? Hey G-Man, Paul, in despair. Steve, scalped all day long and a healthy green. Nice work. Not used to these afternoon streams. I know. It's not going to be the norm. This is my last week of taking the kids to camp in the morning. So today should be the last day that I'm doing the afternoon streams. I don't know though. I don't mind the afternoon streams. I just wish that there was a little bit more movement. Because, you know, I logged on and it might not go anywhere. Let's be real. The last couple of afternoons it has just been dead. Shame. I know. It's fun to hop on the afternoon. Get to see I was going to say see new faces. I get to meet new people, see new names. Hey, B Frosty. So I am in a short right now, which I know is very much against the trend since the bottom at 9 o'clock Central Time this morning. My reasoning for it is if you look at the higher time frame, it was like to the dot a fair value gap fill on the 1 hour, or this is the 30-minute time frame, but it's about the same on the 1 hour. 328 would have been the gap fill, and we came up to 323 and rejected pretty heavily. So not looking for a home run move on this, maybe just a couple points down. So we'll see. But this morning, I actually did not have a great morning. I got chopped up in the open stupidly. I made a mistake and tried to trade the open when I was also multitasking, getting the kids ready for stuff. And within the first couple minutes of the open, this little candle right here was a liquidity grab. I thought we were bouncing. Took a small long. It wasn't that big of a long, so got out of that one fast, down like $100. This is the one that got me right here. I took a pretty big loss on that one, and I've been fighting my way back to green ever since then. So the reason that one got me is you see all this liquidity over here to the left. We were at value area low from yesterday. We had lots of liquidity and we grabbed it. So we had this 15-minute opening range. We came down. What I thought was we grabbed the liquidity. You can see on this 5-minute candle right here, we closed back within the range. So I thought it was a fake out to the downside. And I took a long there. After we closed within the range, I was targeting the other end of the range. That one did not work out at all. That one sucked. So After that, I've been taking really small positions just because I was close to my daily loss limit and I didn't want to get locked out on my account. So I've taken 3 good trades since then with really small positions and have gotten myself back to green. So kind of annoyed with myself this morning, but glad that I was able to like come to my senses and get back on track. So again, I know this short is against the trend that we've had pretty much since this morning's dump. But I have some decent confluences for it. My target down here is at 226, which is right at VWAP. And then also it's the bottom of this quick wick, just kind of going for the wick fill. We'll see if it happens. I'm going to be pretty quick to kill the position if it starts to go back up. But it looks like buyers are slowing down a little bit. So we'll see if we get any movement at all, honestly. Yeah, that's tough, Travis, if you're like going for a specific like 2R or whatever, and then the trade just keeps going. Do you only trade to a specific risk to reward? Or do you try to take into account price action and trade to like a level? Hey Brick, how's it going? Good to see you, man. Two R unless an obvious level is in the way. So you never hold it for more than 2R, you take off no matter what at 2R, even if there's another level above that or below that, like further. $2.2R on gold today. Nice. I didn't even look at gold today. So if NQ had a massive dump at the open, did gold go up? Was there a pump on gold? No. Gold went down. Dang. That was a big drop right there. Every time I switch screens, my VWAPs go crazy again. All right. Come on down. Go down, go down. Is anyone in a trade right now? Let me know what you guys are thinking right now. Give me 1 second. All right, I'm back. Paul and Steve are sitting on their hands. Yeah, there's really not a whole lot of movement. So, who knows if we're going to even have this go to my target. But I feel decent about this one. Looking at Bookmap, there were, if you guys follow the heat map, there's those big green dots or bubbles, whatever you want to call them, all the way up. And at all these levels that would or could have been resistance, like London High at 283 or this wick at 293, everything that could have possibly been resistance, there was a green bubble that showed up on every one that showed me that buyers were still buying at these levels. So when we got up to like 320-ish, red bubbles started to finally show up. So sellers weren't as on fire anymore. And then, like I mentioned before, this fair value gap on that big old candle right there, that got filled at 319. So that was my reasoning for taking a short. We'll see if it goes though. Yeah, so live data, like G-Man said, is $7 a month. Or if you sign up with a prop firm that uses Trade-of-8 or a Ninja Trader or something like that, you can connect your prop firm brokerage to TradingView, and it's included free in your prop firm like sign up fee. So Tradeify, for example, like whatever prop firm you use that has a Trade-of-8, TradingView, anything that you can connect to TradingView. I'm not gonna let this go all the way up to my stop. If it doesn't come down here in a second, I'll probably kill it. Sam, what prop firm are you using, if any? All right, G-Man, have a good day. Ah, okay. Using your own account. Cool. You've read things about prop firms that make you wary of them? What's that? There's definitely a lot of things about prop firms out there. I think there's good and bad. You definitely have to choose the right ones. If you choose like some brand new company or something, someone that has like crazy rules and super cheap evals or anything that seems too good to be true, you probably should be careful of that because they might go under and then not be able to pay you out. And then the rules, I mean, a lot of them you have like a 20% consistency rule, or you have to trade a certain amount of days before you can claim a payout. So, yeah, you can claim that those rules kind of suck, but at the same time, as a new trader, I think it almost trains you to trade the way you would in a live account anyway. Because if you're trading your own money, you would probably still want to be consistent and keep some sort of like daily loss limit and establish some sort of consistency where if you've made a certain amount of money, then you stop trading so that you don't end up giving it all back to the market and over trading. Like some of those things that I think are the rules in prop firms are good rules to have on a personal account to some extent. Maybe not as strict, but it's good training in my opinion. And less risk. If you haven't proved that you're profitable, then you can trade someone else's paper money for, $40 or $50. Like you can buy a cheap eval and kind of practice with that. Whereas if you have your own money, there's no practice. If you lose, you're losing real money. Yeah, all this stuff about not getting a payout, that if you choose a good prop firm that's been around and is established, they'll pay you out. You just can't be stupid and not follow the rules. So all the chatter about not getting payouts, those are rumors. But yeah, in the long run, you can make more money with your own account. It just depends on if you're ready to actually risk real money or if you want to practice with internet money first. Internet money that can turn into real money, which is pretty cool in my opinion. Yeah. And what Travis said too. Like to really have a good amount of drawdown and a good like personal account, I would say you probably need at least $10,000, if not more. Not everyone has that much money. But for $50 to $100, you can get access to that with a prop firm by buying an eval. If you haven't traded at all, Sam, and you're still like doing paper trading and researching strategies, I personally would recommend a prop firm. Because paper trading doesn't help at all with the mental game because there's no like emotional buy-in. It's really easy just to win all the time or like size up way too much and there's no emotional side of it. The revenge trading, all that stuff that happens with real money. So a prop firm is kind of that in between where you have a little bit of an emotional investment in it because you don't want to just trade like a dummy and lose your $100 or whatever that you just paid for this eval. So it makes you be a little more careful and you have a little bit more buy-in. So it's a better way to learn. That's just my opinion. Everyone has their own thoughts. I like Top Step because it's only $49 for the eval. There is an activation fee if you pass the eval. So it ends up being $200 to get a funded account. But the plus side to that is you're only out $49 if you blow the account. So that's a plus. I really like Treatify. With their sale right now, they have a 50K growth account that is $90. And there's no activation fee. So if you pass the eval, you go to the funded stage without paying anything. So that's a good one. Top One Futures is good. Similar thing. An eval is about $90, something like that. So for anywhere from like $50 to $100, you can get an eval. Apex has them for like $20, but they're one of the ones that have the rumors of not giving payouts. I don't know if you want to deal with that. And they also have a rule, if you're familiar with intraday drawdown. I'm not a fan of intraday drawdown at all. I think it's the stupidest rule ever. So I would avoid Apex personally. All right. Anyone like watching paint dry? That's what we're doing right now. I'm going to drink my Element. I've always been a fan of Element. It's like an electrolyte replacement drink. I like salty stuff. Like, I've always been one to add salt to my food. Not like restaurant salty food. I cook at home all the time, so my version of salty is not the same as like processed food salty. But I got off on a little bit of a tangent. That's why I like Element, because it tastes like salt in my drink. It's delicious. But they have this somewhat new drink that's a carbonated version of Element. It's pretty good. Tastes like a salty Sprite. It doesn't sound very good when I say it that way. Yep, Min, I agree. Sam, what Min said was saying, if you haven't read the chat, go with the evals. The instant funded accounts are more expensive. I wouldn't recommend going that route until you have a pretty proven strategy, because you're gonna blow them, probably, likely. Yep, that's the way I think of it. Be Frosty, it's kind of an investment. Like, you pay $200 and then, or you invest $200 and then you get a payout of a couple $1,000 or however well you trade. OPM, other people's money. Unless you're just loaded and you have a whole bunch of cash that you can trade, you might as well use other people's money if you don't. Sam is getting all the advice that they didn't want. No, hopefully it's helpful. It's always nice to, in my opinion, learn from other people so that you don't have to make the mistakes that they made. So coming and asking questions is also good. Yeah, Top Step is one of the ones that's been around the longest. If they go out of business, then prop business is done for. Do I do OPM? Yes. I'm all about OPM. That's how I got through business in general. I'm not afraid of a loan if it's gonna pay off. Business loan, real estate loan, whatever. Not that prop firms aren't a loan, that's not what I'm saying. But yeah, I'm a big fan of other people's money. Trading options and trying to figure out how to make it transferable to futures. I'm not familiar with options hardly at all. So yeah, I don't know. All about researching a new strategy, I guess. The way I did it is I just watched hundreds of hours of YouTube videos on all kinds of strategies. I looked up like ICT and trend lines and MACD cross, RSI, like all kinds of stuff. And a lot of it just seemed way too confusing, so I like crossed that off the list. If it didn't make sense to me, I didn't go any further down that rabbit hole. So once I found a couple that like made sense to me in my simple brain, then I honed in on those, like the 15-minute opening range or 60-minute initial balance or volume profile, like some of the stuff that I use now. Then I just typed those into Google or not Google, YouTube, and watched like every video I could find on those strategies. And then practiced it, of course, and figured out what works for me and how to combine them and like what confluences make sense to me, and have made it my own since then. But that's kind of how I did it. I don't know if this is ever going to come down, you guys, or go up. It might not go anywhere. What do I think about the trend line strategy? Well, I'll give you the general answer. I think any strategy can work. Like, there's people that make a lot of money with trend lines. There's people that make a lot of money with EMAs and all kinds of stuff. That doesn't mean I use them. You have to figure out what works for you. The biggest thing about trend lines, and honestly anything, is don't be locked into it. Like, for example, let's draw a trend line here. So that's a pretty decent trend line. There could be fake outs. Like, if it comes down and you automatically take a short as soon as it crosses the trend line, but then there's some other like liquidity or an order block or something like that, and it's a fake out and it bounces, if you don't look at the whole picture, then you're going to get messed up. So I think with any strategy you do, you have to be able to have multiple reasons that add up to enter the trade. So don't just take a trade off of a trend line or automatically take a trade off of a Fibonacci extension or something like that. Anything, any strategy. I use VWAP. I'm not going to automatically enter a trade as soon as it bounces off of VWAP. I'm going to make sure other things make sense too. Can I explain why I'm short? Sure. Because I'm crazy? Probably shouldn't be trading at all right now with this ugliness. But no, honestly, there's a couple reasons why. One is if you look at the higher time frame, there was this giant red candle. That fair value gap fill was like to the dollar where we rejected. So that was a level. I was actually long just before that, and I targeted 320 was where I targeted because of that. And then once we started to reject, I got in short. So that's the main reason. Also, I watched Bookmap, and all these resistance levels, like London High, this wick here at 293, like all of those that could have possibly been a spot to reverse, green bubbles showed up on the heat map. Like buyers were still eating it up. But then as soon as we got up here, lots of red bubbles started to show up. So it just kind of gave me an indication that buyers were slowing down and sellers were stepping in. So that's my reasoning. fully aware of the fact that I could be wrong though, because I'm going against the trend, and we have been pretty much up only since 9 o'clock Central, so like 40 minutes after the open. If it does start to move down, I'm going to be pretty aggressive with trailing my stop. But my ultimate target is right at 226, which is where VWAP is, and this wick. Sam, since you're still researching strategies, what have you come up with? Like, what sounds good to you so far? Or what are you starting to practice? Been trying trend lines. Yeah. I would maybe suggest, like I said, trend lines can work if you do it right. They're also very much based on you. Like, they're subjective. It's based on your opinion. Like, where do you draw the trend line? Which dots do you connect? Most of the time, like this trend line that I just drew, that was actually pretty solid. Like, there's 3 touch points. 1, well, I guess you can count that one because it almost touches. 2, 3, 4. I was really surprised by that when I drew that trend line, because most of the time it's not that pretty. And there's something that's like out of the way. So where do you put the trend line? I think having something that's less subjective can be better. Something that's based on data, not based on your opinion. Because you can have 5 different people draw trend lines and you're going to get 5 different charts. Have you looked into VWAP at all, or anchored VWAP? Yeah, definitely need to understand what it means better. It's helpful for just kind of identifying the trend, which I guess you could say is similar to like EMAs or something, but if it's below VWAP, you can generally look for shorts. Above VWAP, generally look for longs. The argument though with VWAPs versus EMAs is it's more based on current data whereas EMAs and other like that kind of stuff, other lines are in the past. But yeah, that's an option you can look at. Good spot to potentially look for bounces. So these two right here are VWAPs. The dark blue one is the session VWAP, which automatically, with the indicator that I have, it starts at the open at night, 5 p.m. Central, 6 p.m. Eastern. And then this one is an anchored VWAP. I anchor it at the New York Open. So it kind of just gives more recent data from when this session has started. But you can see there's lots of examples that, I mean, I could go back days and give you examples, but you can see here that once we got long, we came back down and retested VWAP, and that's pretty much where we bounced. But just like I said with trend lines, you got to wait for the reaction and look for other confluences. Because if you took a short on that first little peak below VWAP, you would have gotten messed up. Same with any strategy though. I don't know, guys. Who made the name Power Hour? Power Hour doesn't apply in the summertime, I guess. Everyone works half day. Market makers work half day during the summer. Or not even half day. They work for the first 45 minutes of the New York Open and then they go home. That's what's been going on lately. Are we gonna get a little retracement? Are we gonna get any movement? You don't even consider Power Hour until like 3:40 Eastern. Been burned too many times. Why, just with like low volume? Is that what you mean? Like volume's low, so any random buyer or seller can just wick you out of a trade that you think is going in your direction? Like this wick right here. I was in a long. I got in somewhere down here on this bounce off of VWAP. I entered a long. And I was nicely trailing my stop loss based on the 5-minute candles, giving it plenty of room. And then that just wicked me out. Nice little fake out, and then just continued on up to the moon. You're talking about those annoying moves with low volume? Just for the fun of it, I'm going to leave this trend line on and see if it goes through the trend line or if it bounces. Let's see. I'm not a trend line trader, so I wouldn't have even thought to put it on there, but it'll be funny to watch. Better late than never. All right. Our snail's pace picked up a little bit. That last 5 minute candle was like 12 points. We're moving now. Oh man. Trend lines work until they don't. Good on higher time frames to see direction, but not for scalping and lower time frame. Yeah, I 100% agree. Trend lines on like the 1 minute or whatever are just ridiculous. Yeah, I was kind of joking about this. I'm not a trend line trader. I haven't drawn a trend line in a long time. It'll just be funny to watch because it's actually a decent one. I was surprised when I drew it. 4 touch points. Let's see. Is the 5th one gonna melt through it? I hope so. Because it's in the way of my target. Oh, we got our little nitro boost for that last candle. Now we're back to a snail's pace. Yeah, Tory Trades was actually the one I was thinking about when I was saying that you can make money with pretty much any strategy. Because I know she uses trend lines and makes a lot of money. But again, she's figured out what works for her. You got to find the strategy that makes sense to you and then practice it and tweak it and make it work for you. No matter what the strategy is, if you just like blindly copy someone else and it doesn't fit together in your brain, you're probably not going to be successful. Well, market's not moving much. Hopefully we get a little bit more movement here in the next 10 minutes or so when 3:30 Eastern rolls around. Yeah, that's true, what Chichima said. Higher time frames. If you guys haven't already, I forgot to say it, go hit that like button. I missed usually my normal morning stream. Blech, words are hard right now. I missed my normal morning stream, so hopping on late. I feel like not a whole lot of people are usually trading by this time, especially lately. If you didn't catch the move at the open within the first 30 minutes or so, then there wasn't a whole lot of trading to do after that. Oh, 8:20 p.m. for you. Where are you located? That must be in like Europe somewhere. UK, yeah. If you have profit for the day, then you don't trade after 2 p.m. You've given it back too many times. That's a good rule to have. Very good rule. For me, I am Central Standard Time, so it's 2:20 p.m. I'm in Texas. You're at the gym at 9:20 at night. I feel like people react to the gym differently in terms of like energy afterwards. Like some people like to work out at night because it wears them out and then you sleep better. I think for me, it does the opposite. I work out at 5 a.m. and that just like gets me going. I feel ready to rock the rest of my day after that. I think if I worked out at night, I would have trouble like winding down afterwards and actually falling asleep. It's light out at 11 p.m. Dang. So is it dark later in the morning? Like what time does the sun come up? In my opinion, which point of control is better, the overnight session or the regular trading hour session? I personally mark the New York regular trading hours one. Just because there's more volume, for one, and then I personally trade the New York session. So, like, yesterday's point of control is going to apply to today's price action if you do New York versus New York. Also, something I've been noticing, I don't have like data on this because it's just been the last 3 or 4 weeks, but the New York session point of control, like for today, for example, the Asia session that opens up tonight respects that point of control quite a bit. So, long answer to your question, but the New York point of control. So like on my TradingView chart, these pink lines, the value area low, point of control, and value area high, those are from yesterday's regular trading hours. And then when I turn on my session volume profile for like the current session, I keep this on if it actually applies. It doesn't really right now because point of control is way down here. I have this set for the New York session. We got an echo. Is that any better? Ah, cool. All right, so we got a little bit of movement down. Slow grind down. I'm going to actually trail my stop loss to this high here. Because if I get stopped out, I don't want to give back too much of my green. And with low volume, any random wick could happen. So definitely don't want to risk too much on this. If you guys weren't on earlier, I was saying I took a couple of losses this morning. With one was like a solid trade that I'm okay with that loss. But the first loss was just dumb. Shouldn't have been trading, trying to multitask with the kids and wasn't paying attention fully. So, rookie mistake. So since then, I've taken 3 trades that were all wins. I was just super small in my position sizing, and they were good, solid trades that I'm proud of. But I was close to my daily loss limit with the first losses. So I had to do like 2 contracts, like really small positions, so that I didn't hit my daily loss limit, and worked my way back to green. So Sam, here's my 2 cents on this. In the chat, you guys can give your thoughts. But Sam is asking, so what you guys are saying is it's best to start trying out a strategy in a prop firm rather than paper trading a strategy just before getting a prop firm. The way I did it, what worked for me is I did paper trade in TradingView for like 2 weeks. And I think really what that helped with was just understanding like risk versus reward, how to use the risk tool, how to size appropriately. Like if I want to risk $100, how many contracts do I get into in a position? Understanding how to create limit orders and stop orders and just all that stuff. Paper trading definitely helps with that. Like learning how to click the buttons in a situation where the market's actually moving. It's very helpful because you don't really, in my opinion, you don't want to be practicing that in a prop firm because you won't even get a chance to try your strategy. You're just going to mess up because you clicked the wrong button or you like sized up too much on accident. You didn't get a chance to practice that. So practice your strategy in addition to practicing risk sizing and clicking buttons and stuff, paper trading for a couple weeks. And then once you feel like maybe you've gotten the hang of that and you're starting to understand price action a little bit and you feel ready and you have the money to invest, like you're not going to be, scraping by paying your bills if you buy a couple challenges for $50 to $100, then yeah, go to a prop firm. Because that's the fastest way to learn. In my opinion or my experience, you're not going to learn your strategy paper trading. Nice. Bullinox 50K for $15. Oh, I'm not a fan of intraday. Same thing with Apex, and they're like $29 or something like that. All the ones that are $15, $20 are usually intraday. I personally would rather spend $50 or $60 for an end of day drawdown. Yeah, and Bullinox, if you pass, they do have an activation fee, $145. But if you're just practicing and you're likely gonna blow the eval anyway, doing the ones that are cheaper is probably a good way to go. That's why I think Top Step is a great option because it's only $49 and you can blow a couple of them before you have to pay the activation fee anyway. And then once you feel like you're gonna actually pass, I think I like Tradeify with their current promotion. $90 and there's no activation fee. So there's lots of options. I mean, I could list all kinds of prop firms. I like my funded futures. I've taken a couple payouts with them, no problem. So lots of ways to do it. If you go the Top Step route, Sam, they do not have a platform that will sync with TradingView. So that option I was telling you where you can like sign up with Tradeify or something and then link their Tradeivate to your TradingView so you don't have to pay that $7 fee. Top Step does not have anything that will link to TradingView directly. So you would have to pay the $7 fee on that one. Just some of the little intricacies that you learn as you go. Well, it sounds like the general thought is that people don't like paper trading. I agree. Here's another big argued topic, backtesting. I want to hear it, you guys. Are you for or against backtesting? What are your thoughts? This is a spicy debate. I'll tell you my thoughts. If you're brand new and you know nothing about the strategy, sure, it's helpful because it'll give you confidence that like, oh, this strategy actually works, or oh, I can actually see it in action. That's helpful. But after like years of trading, I'm not saying I've done it for years, but I don't think it's necessary after you've been around a while. The reason I don't like backtesting is because one of my biggest things that I need to work on is patience, like being able to sit in front of the screen for potentially an hour and not take a single trade. Like that takes patience. I eventually start to try to find some trade that isn't there and just make something up. Like that's what I typically do, and I'm trying to work on that. Backtesting messes that up because you can put it on like 5x speed and just fast forward to where you find your setup, take a trade, and then fast forward again. And you can find like 10 trade setups in an hour of backtesting. So then when you go to the live market, you're like, oh my gosh, I have to sit through every candle. This is painful. So if you struggle with patience, don't backtest. At least not with the fast speed version of backtesting. All right, I'm going to move to break even. We are starting to get that move down. If we get a random bounce back up, then I'll be out. No risk. One thing that I do like, that I've started to do lately, or I shouldn't say lately, about the last 3 months or so, and it's kind of a version of backtesting, is I document the best trade setup of the day. So whether I took it or not, sometimes I miss it, sometimes I do take it. I'll draw it out, I'll screenshot it, I'll like make little notes about why I would have taken this trade or why it was a great trade. But based on my strategy, like if there was just a perfect, beautiful, like liquidity sweep, failed auction, trade to the other end of the range or something, like it was just an A+ setup, then I'll document that and save it. And what I'm doing is by looking for today's best trade of the day, I'm training my mind to start looking for those live. And I'm starting to see more of them live and be able to be patient to wait for that A+ setup because I know what they look like more now. So that's an option for back testing. All right, still aiming for this 227 level, which is right where VOP is. Looking at that higher time frame, like the visible range volume profile, there's a pretty big area right here at 238. But the bigger area down here is like 220. So taking it off at VWAP at 229, I see as a pretty safe target. We'll see though. Am I live until market close? Probably not. Well, I guess that's only 23 minutes from now. So depends on how long this trade takes to play out. I'll be live until I either get stopped out or I hit my target. So I don't know what time that'll be. Hey Donna, how's it going? Wow, I'm number 1. Yay. I love it. Welcome in, you guys. If you just joined, hit that like button. I'd appreciate it. It helps me a lot as I'm kind of a newbie growing my channel. And then if you subscribe too, it gives you notifications when I'm going live, which I've been doing daily for the last couple months. So if you want to come join me, I'm normally live during the New York Open. Normally at about 9:15 a.m. Eastern time. These last couple weeks have been a little bit off because I've had camps that I'm taking my kids to, and the transport happens right at the New York Open. All right, we'll see if we get some continuation down. We have lots of potential bounce support levels. Normally, I would scale out of my position. Like I might take one off at the 60-minute initial balance high, or some of these levels of support. But I'm in a small position. So I think I'm just going to let it ride. I'll see how it goes though. These are some pretty decent 5-minute candles. If we start to bounce, I'll trim my stop a little more aggressively. You always end up in the school run right when your setup is starting to appear. Oh my gosh, $16 for the Apex eval. Yeah, but it's intraday drawdown, and then you have like a $200 setup fee or whatever it is. I think that's honestly how Apex makes their money. because they advertise that you can have 20 accounts. So crazy degens get 20 evals, and then if by chance they pass them, which they probably don't on the first time, so they bought a couple rounds of 20 evals, and then when they pass them, they have to pay 20 activation fees. That's the secret to how Apex makes their money. Yeah, Futch, trying to trade on your phone, that was the mistake that I made this morning. Stupidly. I've done it before, and I've told myself, like, don't trade when I'm on my phone and I'm distracted doing other things. I did that this morning, and that's why the loss happened. Dumb. I was so mad at myself for it. Slowly making its way down. We got a little bit of volume action over the last 10 minutes. ATR is creeping up. It's at like 13 now. All right, so now that we're below, I'm gonna turn this off. There's too much action going on over there. This level, this London high, which was previous resistance, which could have possibly been support if we were going to hold up here. Now that we're below that, I'm going to trail my stop to that level. So 286. We have 81 orders down at 150. 22, 23, 150. Jeez. I don't know about that. 23, 150 is all the way down at the current session value area low. I don't see it going that far. Unless news happens. I could see us possibly coming to the current session point of control, which is at like 208. That'll get pulled, yeah. Seems like that happens a lot. Orders that are around like 80 to 100, those are still believable a lot of the times. It's when there's something like 600 orders or 300 orders, then I'm like, really? Come on. Those ones often get pulled. Futch, what you said, why I decided to start streaming, kind of similar to what you said, being more disciplined. Yeah, streaming live definitely helps a lot with discipline because I'm not going to make a fool out of myself in front of people when they're watching. But it's definitely hard too. Like, there was a learning curve in the beginning because I was a little bit scared. Like, I missed a lot of trades because I'm like, I think this is my setup. I think it looks good. Like, I was questioning it. Like, but I don't want to look stupid in front of people, so I'm just going to skip it. I'm not going to take the trade. And then it would happen exactly like I thought it would. So I kind of just started taking the trade with, 2 or 3 contracts, micros, and then built my confidence. And I'm like, okay, I can do this. But my goal really is just to be fully transparent in my journey and not like claim that I'm an expert or anything. I think people like to see real people. So watching me have red days or listening to me talk about how I went on tilt and blew my account yesterday or whatever. That didn't happen yesterday, but it has happened before. I'm transparent with all that stuff. So it's kind of fun documenting my journey because hopefully if you guys are still following in a couple years, I can be on these streams like making tons of money and you guys saw where I came from. All right, I'm getting a good bounce. I have my stop loss at 286.75. Right above that London high level. Because if it gets back above that and then like reclaims it, we could be going higher. Seems like I've been doing it for ages. No, I've only been trading in general. Like my very first prop firm account in September of 2024. And then I started live streaming 2 months ago. It was middle of May. So a little over 2 months. Came right back up to that London high level. Let's see if that was the end of the retracement. Now we're continuing lower. Let's see. No, I don't have any giveaways today. I am live streaming Thursday and Friday at the New York Open. And I am planning on, I usually do one giveaway a week. And I haven't done one yet this week. So either tomorrow or Friday, I'll do a giveaway. I'm not going to tell you when. Not because I'm trying to be uber secretive, but honestly, I haven't decided when. I don't know which day. Whatever I feel like. Perfectly placed stop so far. I don't know. Might be coming back up. All right, let's see what we get with this last couple minutes of the market closing. Nope. And it went back up. Alrighty. That's all right. I finished green for the day. I had to fight my way back on that one. I was $75 away from my daily loss limit, you guys, which is $800. So I was at like negative 725. So I ended up taking 3 wins, but I used tiny positions because I didn't want to hit my daily loss limit. So I'm proud of that $400. Cool. Hey, Top Cat, how's it going? Is that my real name? No. How silly would that be if my mom named me Fit Mom? I hope no one is actually named Fit Mom and I'm totally making fun of you. Nope. I'm just a former gym owner and nutrition and health coach. That's what I've done my whole professional life for the last 25 years. So fitness is a big part of my life. And then I'm a mom and I'm a trader. So that's where the name comes from. What contract size do I typically trade? I usually try to risk $200 per trade. So my contract size will depend based on the size of the risk. So I use this risk to reward tool. So like on this one, I rounded up, I was in 4 contracts, but based on this stop loss, I have this risk to reward tool set at $200 in my settings. The risk, $200. And it tells me I need to buy a quantity of 3.4 contracts. So that's how I decide how big I go. Cool. Well, if you guys don't have any other questions, I think I'm going to log off. Hit that like button, you guys, if you haven't already. I'd appreciate it. And then subscribe too. That way you can see when I go live in the future. Typically at New York Open, so around 9:15 Eastern. That's when I go live. Have a good one, you guys. Take care.